Okay, please go ahead.
Okay. Hi, Professor. Hi, everyone. And today I want to talk about the evaluation of 3M company stock price. And first, I want to talk about my motivation. I'm a finance student. I'm very care about how to make money. But during the pandemic, I think every pandemic would result in the reallocation of wealth. So I think there might be some chance in stock market. So that's my motivation to make money. And then when I search from the stock market, is there anything wrong or something good? And so I think most of the company's stock price has been dropped, but there is a few of high technology companies that drive the index up. So when I review the left side of the chart, and I think everyone might know about that in Amazon, and the stock price since the pandemic, the stock price is from below 2000 and has a big jump to more than 3000. But I think most of you know about why the reason, because people tend to shop online and they do not they do not want to go to supermarket, and they want to buy some food on the app of Amazon, and like Whole Food and many supermarket, and I think you all know. And the high demand results the higher price. So I think 3M company has similar situation, because this company produce medical machines, and like you all know the mask. And when I hang out on Worcester, on downtown Worcester or Boston, I think I see most of people wear a mask, and they produced by 3M company. But when I review its stock price, you can see that since pandemic, it doesn't show a big jump. I think it might be some misunderstood, and it might be undervalued. So I do some research about that. And first, I want to introduce my data, and I use all the data from Bloomberg and about its dividends and 3M adjust close price, which is like a price for the ending trading of that day. And SP 500 is like an index, and which I refer it to market return. And I use three data to calculate the. By the way, I use the monthly data of left side of the 3M company stock price and the SP 500 index price. And so I use this price to calculate the monthly return of 3M company and the index. And by the way, I also introduce the price movement, which is compared to this period to previous period. And
Sketch, I have a point in your project. Explain how you calculate the return. You don't have to explain here. Okay, but in your project, because the people may not be from finance, so they should understand what you did. So basically, your unit is a month, right?
Yes.
Okay, very good. Go ahead.
Monthly return. And so I just show you the data from Yahoo Finance, and I mean the two chart of Amazon and the 3M company. And now I compare the index, the average of stock. I use Tableau to show you the average stock price and the index price. And we can see
I have a question. So the variables that you pick from Bloomberg, they are also available in Yahoo Finance. So what's the reason you picked them from Bloomberg?
And Bloomberg is Bloomberg. We can find more than 10 years 10 years data, but in Yahoo Finance, we cannot find the so long period of the
I got it. Thank
the
you.
data. So and for this slide, the left we can compare those two, and we see that actually the index of every year has a trend of increase. But we all know the reason. The tech company has driven the index up, and right. But we can see the 3M company's stock price show very weak during this pandemic. But I think it might be increased at this time because of high demand of medical machines like the mask. And so when I found 6 years dividends and of 3M company from Bloomberg, and this is every year's data, and we can see that it from the nearly 3 to jump to 6, nearly double for 6 years, but its stock price has been dropped. It's weird because and that's the reason. And I show you two formula. I know most of you are not familiar about finance. I just want to talk about the second formula, and you can see my mouse. This VI, which means the stock price, and DI is just I show you the dividends, and the G is G is like the dividend growth rate, and we can see the DI, which is which is the dividends. It has always increased since this years, and the G is growth rate, and we can see the growth rate is always, I think, it is increased this years. We can see the trend, and RI we use this formula, but I do not know RI at this time. For the formula, we can know that the stock price should increase at this time. And so I do the calculation. I know it's too complicated. I use Excel file to calculate that, and I would upload it on Moodle, but it may waste a lot of time to explain this formula. But
you don't have
it's
to
very
explain
famous.
it. I'm just saying in a professional report you should include it, but that's fine. Here you don't have to explain.
Okay. And so I calculate intrinsic value is more than $1,000, and actually the annual value, the we can see from the Bloomberg and or Yahoo Finance is around $200. So the 3M company has been undervalued, and so I'm a little confused. I'm a little confused about why it is from 200 to more than 1,000. It's a little bit weird. I'm a little confused. I'm a little doubt of my result. And by the way, there is some condition about the first formula, so it might not true for this value. So I do some predictive analysis online. And first, I want to introduce the price movement. If I use as I just mentioned, I use the monthly data, and if I compare the period of the next period, if the stock price is higher than the previous one, and I point out the sales is 1, and if the stock price is lower than previous one, I point the sales is 0, and we can got a very long column from Excel file, and then I use 9 to predict them, and I use SVM predictor, and I think you all know about the whole
Could you
thing.
explain? Please tell us what are your independent variables and what is your dependent. We know your dependent variable, but show us your independent variables.
My independent variable is the 3M company's stock price and the index stock price. I think it's it can reasonable to explain that. And so I use this.
How many independent variables you have?
I have 2 independent variable, 1 dependent variable.
Okay, go ahead.
Mm-hmm. And I use SVM predictor to predict the price movement is 1 or 0. As I show you the price the prediction is 1, and which means that the stock price would goes up. When I see the accuracy is 64.1%. I think I want to improve the accuracy, but I think it's hard to do some adjustment of my data because it's all from Bloomberg. It do not have a lot of like missing value, or it's not. And I think other if I change the independent variable, it's not be reasonable of that. So I change the model, and I mean the predictor. I use random forest predictor to predict that, and we can see the lower bound is 0.98, and the upper bound is just 1. And we know that the price movement is 1 or 0. So I think the price move, so it would be 1, and which means the stock price should be goes up. And when I review the accuracy, it's 1. And I think, is there anything wrong? And so I think it might not wrong, because I do the Excel analysis, and I just use SVM predictor to do that. I think the two analysis told me that the stock price would goes up. So, and I think it has some reasonable about that, because of the because if we don't care about the analysis above, and we know the whole industrials, and it should has increase in, it should reasonable to for the stock price goes up. So I think it's reasonable to for the accuracy is 1. And my business suggestion is that we can buy 3M company stock as soon as possible. And that's it. Thank you.
Okay. So go back when you define the dependent variable, the price movement.
Yeah.
I check your data later, but look at here. Your price movement is the stock price minus what happened in the previous period, right?
Yes.
Okay. So let's say in your each Excel row, you have 2 independent variables and 1 dependent variable. What I want to see, the price movement should be comparison of previous time and current time and previous time. Also, your independent variable should be for previous time, not the current time. Do you get the point?
And you mean I need to include the
I mean, you should be sure that your independent variable should be for the previous period, and also your dependent variable, it should be basically for the next period, because in the next period you can do the comparison. But when you want to do prediction, you don't see future. You just have the current time, the past time, and you want to predict the future. So when you train the model, the timeline for your independent variable should be ahead of your dependent variable. Okay, let me.
Okay.
Just give me.
I got your point.
Okay, let me.
I think I got your point.
Got the point. Okay, if you want to explain, I can explain on my board. But if you got the point, so just be sure that you are predicting something in future. I mean, it's very obvious, So.
Yeah. Okay. I would do some adjustments later.
You need to either shift your dependent variable or shift the independent variable. So the time, again, your independent variable should be in the past. Your dependent variable should be in future. Basically, you want to use past to predict future. So do that, you might improve. Maybe you didn't make any mistake and you're right. So that's good. Just check that. Also, your independent variable is very limited. I had some similar research. So I'm not sure about Bloomberg, but I'm pretty sure in Yahoo Finance, you can get, as your independent variable, you can have low price, high price, volume, adjusted price. So these are the variables that you can add. So, and also, let's say, let me type it here for you. So I'm not sure if the people over Zoom can see that later, but basically high, low, volume. Let me just type it. High. My God, my keyboard has some problem. Let's see if I can fix it. Okay, yes. High, low, volume, adjusted. RSI. Moving. So I added 5 variables. You can Google and find these are finance variables. Let's see that. So you can have the high price, low price, volume, adjusted prices, so RSI, and moving average. My average has a typo there, so the moving average should be.
No, I know.
Okay, so you can add these variables. Also, but my main concern is about how you set dependent and independent variable. Just check that. Otherwise, it's a really good project. And sometimes I know it's very weird, but in some project you have 100% accuracy, and it's not your fault.
Yeah, I know.
Usually it shouldn't happen.
I will do some adjustment.
Especially for stock market, it looks really weird because stock market prediction looks a tough problem. But just check these things, and but generally good project. Thank you very much.
Okay, thank you, Professor. Thank you for your listening.
Okay, thank you. And okay, I'm going to share this one for your friends. I think finance analytics is a new topic. You can work on this topic and have really good publications.
Thank you.
Okay, good.
I'm
good
very appreciative about that.
Oh, thank you very much. I'm happy that you did really good project. Okay, have a great day. If you want, join me in other guest speakers or in the evening. Cool. Bye.
Okay. Bye.